I'm Charlotte McLeod with investingnews.com, and here today with me is Lobo Tiggre, CEO of independentspeculator.com. Thank you so much for being here.
Always a pleasure, Charlotte.
Really good to be catching up with you. We're at very exciting times in the precious metals market, and I wanted to open up with a question from one of our audience members because I think it aligns with what you were writing about in your newsletter this past weekend. So the question is, how long do you expect this gold and silver bull market to last? It seems too good to be true at this point, and it's making me wonder.
Yes. Crystal ball, honest answer is nobody knows. But to be more useful, there are two general scenarios. One is we are, in fact, in that blow-off top phase. It's going vertical. That doesn't mean it's over. And it could easily, as crazy as it sounds, gold and silver could both double from here, next week or next month. If we're in that vertical stage. You look at January of 1980, right? And that $855 was an intraday peak, not a monthly or a weekly. It was an intraday peak. So if that's what's happening, it will be over soon. Now, it may be over soon after going much, much higher. It could be over soon, and last Friday was the top. We won't know until we know. The other scenario, though, is that we're nowhere near the top for all the reasons that I'm sure all of your many guests and have the central bank buying, the de-dollarization trend, the electrification trend, the data centers, nuclear power, which uses silver too, by the way. It's all linked together. All these reasons, those are legitimate reasons for the bull market to continue. So believe it or not, even at these levels, I'm usually the cautious guy. When something has pulled a hockey stick, I'm the one unpopular on the Group W bench for saying, hey, correction's likely. My base case is actually that we will go into a period of consolidation here, and then there'll be another leg much higher. That said, the vertical, the screaming action we've seen in the price charts, and particularly silver last week, it's hard to look at those charts and not be a little bit concerned that it might be too much, too fast, and at least some measure of correction is due. So what to do with that? I have a specific idea for that. If you're convinced that we're going in that blow-off top and it hasn't peaked yet, the thing to do is actually to buy the blue chips, to buy the biggest, most well-known names. I don't need to spell them out. You know who they are. Because the Johnny-come-latelys, the people who are hearing about gold for the first time on CNBC and, all these generalist investors they come piling in, they will go to, as Doug Casey used to say, those go-to stocks. They will go to those top royalty and gold producers, and that will be where that money goes first. So it's an if statement, but if that's what you think, if you're convinced that we're in that blow-off top phase and it's not behind us, that's the way to play it right now. Because a blow-off top may not last very long, and there may not be time for it to trickle down to the juniors and mid-tiers and so on. But the money coming in will go to those names first. If, like me, you think we're in that consolidation or we're looking to go into that consolidation phase before a much larger move up later, then maybe not so exciting. But the thing to do is actually to wait. Sometimes the best thing to do is nothing. The idea is to buy low, sell high, not buy high and hope to sell higher. So if I'm right about a period of consolidation, remember when gold went screaming up to 2,000 in 2020, I got a lot of hate then for saying it might correct, but it did. And it corrected, I don't know if we got it officially into, down 20% for a bear market, but it corrected 10, 15% easily after 2020 and consolidated for 3 years before moving up again. It also did a bit of a correct and consolidate at 3,000, not much at 4. What I'm saying is, if you think that consolidation before the next move higher is what's happening, then the thing to do is to wait for volatility to be your friend there. There will be buying opportunities. There's no need to chase stocks that are hitting all-time highs. You could get much lower entry points in the months ahead. And if not, if that doesn't happen, you can't kiss all the girls.
I think that gives us a good idea of where you think things could be going and also what you're doing. And I am really getting a lot this time around that personalization is so important. You have to figure out what is right for you. So I'm wondering, there's these two scenarios. Is there any thing that would push you more in one direction than another when it comes to, the upward momentum for gold and silver
Yeah.
or a downward
Yeah.
move?
Well, believe it or not, I'm a fundamentalist. Like, I try to look at the world, what's going on in the world. And by the way, we look at the geopolitics and all the things that are going on in the world make me very bullish. That's the way I look at things. And then I'm not a trader. I want to buy something that should benefit if I'm right about the trend, and then hold on to it until Rick Rule's unanswered question is answered, right? They build the mine, or the discovery turns into whatever size deposit it's going to be, or, whatever the unanswered question is. So, that's the normal me. But in this market, if the question is, are we in that blow off top? Well, actually, price is the way you answer that. That blow off top is a period of rapid, like, vertical gains. And so if you had this conversation a month ago, my answer would be, it doesn't look like we're headed into the blow off top yet. It really looks like, we've gone up a lot, and we'll probably go into this consolidation period. 2 weeks ago, I still think we're headed for consolidation, but it's starting to look more blow off toppy. Just this yesterday, it's Sunday today. Just yesterday I published, I'd say right now it looks 50-50. The price action has gone so vertical in the last days, if not, the last month and the last year, that it's starting to look like a blow off top. And, I hope it isn't, because my fundamental view is otherwise. And if it is the blow off top, then the next thing that happens after a blow off top is a bear market. But Mr. Market doesn't care what I hope or want, so we got to look at the data. And right now, the answer to your question is, like, it's been changing. And if we have this conversation a week from now and it's gone screaming up even higher, then that would actually make me think that, yeah, we really are in that blow off top phase. And it would change my marching orders. It would change what I would look to buy. It would change what profits I would look to take and how much. Because I'm expecting a longer term bull market. Consolidation, then another move up later. If that's not what we get, if what we get is the blow off top now, then what comes later is a bear market. So if we get the blow off top, then I'll probably do a lot more selling when it turns over, when it rolls over. Instead of just recovering my initial investment, I probably take the much larger chunk, or maybe even exit some positions entirely that have completely exceeded my expectations, as Rick says, right? Because that's what follows a blow off top. So for the audience that's thinking, oh, this guy's talking bear. No, that's not what I'm saying. I'm saying if it's the blow off top, this isn't me saying this. This is history. What follows a blow off top? We all know what happens after the blow off top. So if that's what's happening now, it should change how you look at your profit taking.
Yeah, I think there's a lot of nuance here to pay attention to, and things are moving quickly, so they can be adjusted at a later date. I do want to talk a little bit more about taking profits, and I'm wondering, you talked just now about how that could change moving forward. To what extent have you taken profits already, let's say in gold and silver stocks?
Not as much as Rick, but enough. Let me put it this. I think we've talked about this before. It's very hard for anybody to know where the top is, not just the markets, but even the specific stock or whatever. I'm a buy and hold guy. I buy something because they're building the mine, and I sell when they've built it, right? Or I buy something because I see success in discovery, like in process, that first part of the Lassonde curve. They're clearly charging up that first ramp in the Lassonde curve. Then they get to the top of that part. Then that's time to sell. They're going into the boring engineering phase. That's not when I want to own the stock, right? So in general, that's the way I look at things. But at times like this, you really need to think about how your profit taking will be. If it starts looking like we're in that blow off top phase and the next thing is a bear market, then you would want to take more profits than you would if we're still in the ramp up phase. And then the type of company makes a difference. If we're looking at, some crazy junior that's got some exciting results, but they don't actually have a deposit yet. We don't actually know if the thing has any value at all, but it's got exciting headlines and the stock is way up. I would lean on taking a lot more profits from something like that, because it could go basically to zero, or not quite zero, but it could come crashing way down if the very next press release is disappointing. Or let's say I got lucky with some company that's doing really well in some kind of scary political jurisdiction, or one that maybe wasn't so scary when I bought the stock, but has gotten scarier since then. Well, then, if the market turns and I'm taking some profits, I might not just take profits, I might sell everything. Like, prices are up, I've got a chance to get all of my money and some profit off the table and eliminate my risk. I might just do that entirely. If it's some other company, let's say it's a growing producer that's profitable, and they have, they put the first deposit on production, and we got 3 more just like it coming online. So you see the growth there, and they're making money. I'm not really worried about it. Well, then I might not take so much profit. I might just only recover my initial investment and leave the rest of the money on the table. So I'm afraid one size doesn't fit all here. And, my own risk tolerance. Oh, that too, yeah. Like if I'm retired on fixed income and I really can't afford much risk to my nest egg, I'd probably be more careful about taking more money back off the table. And then you don't have to worry about it. Once you're what Rick calls the beyond the point of no concern, right? That it's the best thing in the world to be able to speculate for big gains, but actually have no risk. You've got your initial capital back off the table. Whereas if I'm 19, no kids, swing for the bleachers, if I lose everything, I can pick myself up, dust myself off, and do it again. So definitely one size doesn't fit all. But the takeaways, I think, are first and foremost, like you must have a strategy. You must think through, what are my exit strategies? How will I take profits? What kind of investor am I? You don't want to just be making a decision willy-nilly, with no basis. You should have this plan in advance. And in markets like we're in now, where you're being handed huge profits, like every week we've got more money, these things keep going up. You should think that through. And to those very enthusiastic people on social media, it is not treason to take profits. It is not lacking conviction to take profits. My summary is, I have taken profits substantially. I've gone mostly risk-free, and I've paid off my mortgage. And I have more money in the market now than I started with. So like people are saying, oh, you gave up, you sold too early. No, I didn't. I've got more money in the market now than I started with. But having taken some profits on the way up, it paid off my mortgage, right?
Congratulations.
And, like, how cool is that? I can not just sleep at night. I can sleep at night with the roof over my head completely paid for.
Yeah, that's pretty amazing. And I think you answered a question that I was going to ask, which was, when this gold and silver bull market is eventually ended, would you expect to be out of all your gold and silver stocks? And it sounds like no, because for you, you're not buying them with that expectation of the price going up. There's the company story to follow along.
Well, yes, and I mean,
okay.
I can't imagine. Well, I can imagine. I'm a pretty imaginative guy. I think it is unlikely that I would ever be completely out of the market. Even in a bear market, by the way, that pre-production sweet spot that we've talked about before, that's my favorite, type of speculation, those tend to work even in bear markets. So there are some stocks that I could see holding on to even in a bear market. But clearly one would rotate. And this is actually the subject of my talk that I just gave here at the VRIC. Like what to do when everything you love is dear. If the idea is to buy low and sell high and everything you like is high, yeah, sure, it might go higher. I'm not saying it won't. But if the idea is to buy low, then you can't buy what's already high. And fortunately, not all markets are in perfect sync. And right now, I've actually been rotating some of my profits into the oil patch. I still like uranium and copper. We can talk about that too if you want. But the thesis on those is so obvious that the stocks are also at 52-week or all-time highs. Many of the better ones are being recognized by the market. So I'm waiting for volatility to be my friend there. Whereas in the oil patch, and Rick has been saying this for some time, others too, that oil is hated, right? So that's fine. But it's also been sliding for years. And so what's changed for me is that I can't say the market has bottomed, but there are legitimate opportunities to actually buy low in the oil patch, which I just don't see almost anywhere else. So if the idea is to buy low, there is an opportunity. And here's the thing. If your process, if your method is to constantly buy low, sell high, take some profits as you go, that will naturally rotate you into the next thing that you buy low. So I don't know where gold and silver peak. If they double from here, I will still make more money because I'm still long. But if they're done, if the peak was actually last Friday, I'm already rotating into other areas. And I can't lose. Like, I've already taken my profits, right? So I win if it goes up. I can't lose if it goes down. And I've already started to rotate into other sectors. So if it turns out that the next thing is a bear market for years, well, I'm already deploying into new buy low things. So I'm not pretending that I know how this is going to play out. I'm not making a prediction here. What I'm making the case is, if you focus, if your method is to look for opportunities to buy low, that will naturally, almost automatically, rotate you out of things trading high into new things trading low, and that will, wash, rinse, repeat. It will move you forward. You don't have to know where the top is. You just look for opportunities to buy low.
Let's talk a little bit more about oil in that case, because I think you've brought it up a little bit before and said it's not the time right now. So now it is the time. Where are you looking to focus when it comes to the oil sector?
Okay, let's be very careful here. I'm saying that there are opportunities to buy low in the oil patch now, which I'm not seeing almost anywhere else. I haven't actually bought anything new yet. Like, the new edition of the Independent Speculator just went out last Monday, and I put a shopping list on there, and the guidance wasn't, here's the stocks I want to buy and here's the price, which is normally what I do. Here's my entry level. And this time I said, here's stocks I'm looking at buying, and I will set the price when we get the next big volatility, because we've been seeing all these spikes up and down in oil. Oh, there's going to be peace in Ukraine. Oh, oil goes down. Oh, there's going to be no peace in Ukraine. Oil goes up again. Or, oh, OPEC's doing this. Oh, oil is down. It's been doing these crazy spikes up and down. So for years, really, on the way down. So I don't know where the bottom is. I think it's cheap enough now, it's hated enough now, a la Rick Rule, that I see good opportunities to buy low. But my guidance isn't, so buy today. My guidance is, buy on this next volatile spike, downwards, negative spike. The chances are almost zero that there won't be one. So I'm looking at a market signal, a market volatility signal, as opposed to a specific price. As for what kind of companies, there's a lot to choose from, but when you're looking at a cyclical low, like oil's been sliding for years, and I think what we've talked about before, we've discussed this, is, yeah, I get it, I agree with Rick, but I don't want to catch a falling knife. And what I'm saying now is, I'm not sure the knife has hit the floor and is lying there, but it's pretty close if it's not there. Close enough for me. So that's the difference. And if you're going to do that, if I'm right about that, if Rick's right about that, we're looking at a cyclical low. Sure, if you find some junior with an exciting exploration play that just makes a new discovery, you can have, a 20-bagger, maybe a 100-bagger could do that. But nobody knows that in advance. The risk there is quite significant. From my view, is like, why bother with that risk if the consistently profitable, well-known, dividend-paying oil stocks have the potential to double, triple, or more if we're right about a cyclical low? I'm okay with merely doubling my money or tripling it if my risk is not nil, but very low. Like, very low risk, decent reward is much more interesting to me than very high risk and amazing reward, but what are the odds? So it's funny, I'm a speculator, but I'm not a wild gambler. I'm pretty cautious. And sometimes I'll swing for the bleachers, but in general, if there's an obvious no-brainer type pick with low risk, why bother swinging for the bleachers? A double or a triple is not bad.
I think that makes a lot of sense. So thank you for going into that, and we'll check back on oil and see how that develops. I also want to ask you about the status of copper. So we've talked about gold and silver. They're at these all-time highs. Copper also getting to record levels this year. So were you able to get you the entry points that you wanted for the copper companies you were looking at?
Yes and no. I did buy one copper stock last year, and that was because there was a company-specific fluctuation. This is probably giving it away. I generally don't give away stock picks because that's what people pay me for. It seems disrespectful, and I don't want to be a tout. But I thought this one it was oversold. Like there was some legitimate concerns about this stock, but the sell-off was completely disproportional. So at that point, I'm a copper bull, and okay, most other stocks are trading high, but this one is oversold. So it became, in my mind, kind of a no-brainer. And by the way, it's done well. But other opportunities have not materialized. I had a pretty lengthy copper shopping list, and I didn't get filled on any of them. There were two in specific that I even set price targets, and I didn't get filled, and they've run away from me. And I don't know if I'm a mutant. I don't feel FOMO, but I'm just pathologically averse to chasing stocks. I refuse to chase them. So, like my friend Doug Casey said, you can't kiss all the girls. And if these ones danced away from me, I'm not going to run after them. One more thing on this. If you remember last summer when there was a scare in the copper space about the tariffs and copper went gonzo. And then the tariffs came out, and it wasn't copper, it was finished copper products. And copper fell off a cliff. And then it recovered later in the year, and it's new all-time high, at least nominally. But that was exactly the kind of opportunity I was hoping for. Copper falls off this little cliff, and I'm thinking, great, I'll be able to get filled on my copper stocks. No such luck. The stocks held up, and they wobbled a little bit, but they didn't sell off anywhere near as much as the metal did. So as a potential buyer or as a would-be buyer at that time, I found that rather frustrating. But it tells you how obvious the opportunity is in the space, which makes me even more reluctant to chase it. And what I've been saying now is, you know what? If copper never corrects and none of these stocks come back into range and I end up short and not buying any of them, that's okay. I'm not going to chase them, can't kiss all the girls. And why do I need to do that when there are actual buy low opportunities on the table? Right? It's just not necessary to buy high and hope to sell higher when there are bona fide buy low opportunities. That having been said, that little known country just to the south of where we are right now is, if nothing else, a source of change and uncertainty in the world these days. And volatility can be our very best friend. So I'm not the sort of person who feels FOMO anyway, but even if I was, I would, tighten up and bear out, because if there's one thing that I'm highly confident we will see more of this year, that's more volatility in the markets. So the last big scare in the copper space didn't give me the buying opportunities I was hoping for, but I think we'll see more, and I will be surprised if I don't get a chance to buy some great copper companies at least better prices, acceptable prices, not all-time highs.
Okay, well, we'll follow up with you on that as well. And for now, we'll wrap it up. I know you don't like to be promotional for yourself, but can you let us know what you have on offer for these interesting times, where we can find you?
Sure. Well, thank you very much for that. Obviously, I'm the due diligence guy on X. The website is independentspeculator.com. And I have a free weekly letter called The Digest, which you may or may not agree with everything I say, but it's free, and we won't spam you with advertisements. You get one email per week. But I'll say one more thing. In this environment, you may not agree with me where the markets are going or which is your favorite commodity is. That's fine. I don't proclaim to be the future-knowing guru. What I do claim to be is a due diligence guy. And there's no amount of money any company can pay me to give them a positive rating when they don't deserve it. So, like my good friend Rick Rule, I have a sort of rating service. He rates your portfolio, I rate companies. And we have a database which has about 1,000 companies in it, and we take requests from clients. And we're not always right, but we're always independent. I work for my readers only, not the companies. And so far, the companies that get a thumbs up, or I'm a wolf, so it's a claws up, have outperformed the ones with the claws down. So it seems like there's some utility in my independent evaluation. So I bring this up just because Rick's service is the closest thing I know of that in this space. I don't know of anything else like this in this space. And the point is, you don't have to agree with me on almost anything. All you have to believe to do business with me is that I'm not a crook. I don't want to quote Richard Nixon, but I think I just did. But if that's true, then I can help you with your due diligence. Like, I'm bearish platinum, let's say. You love platinum. Well, I'm still going to evaluate the platinum company to the best of my ability. And my team, I have a whole team that helps me do due diligence. We do site visits. We go, travel around the world kicking the rocks on our readers' behalf. So maybe that's of interest to people. If you're personally not going to go around the world kicking rocks, you can hire me and my team to do it for you.
Well, I think that could certainly be of use to many people. So we'll have your links in the video description. People can take a look if they would like to. And we'll finish there. Thank you so much for coming on to talk about what's going on in the markets right now.
Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Lobo Tiggre with independentspeculator.com.